Time for our ETF Spotlight. Bob Pisani is here on the floor taking a look at the best and worst performing sector ETFs as we close out the year. Hey, Bob.
Hey, Mike. And of course, it's tempting to say it's just been a generally bad year overall. But in fact, there's a very wide dispersion in performance, unusually wide, even by the high volatility standards of this year. Let's look at the big underperformers. And I'm expressing this in the form of ETFs. Remember, you can go out and own these sectors just by yourself. I put up the stock symbols there as well. Energy, of course, much of this decline has come since October. Remember, we were close to $70 in oil, went to 45 on the global oversupply concerns. That's been the big issue there. Banks have been underperformers all throughout the year on flatter yield curve and modest loan growth expectations. And materials and industrials have really moved very much together on the slower global growth and trade concerns. But if you look at the other end, it's really been remarkable how far. It's very rarely you get 20-25% differences between the high and the low sectors that are out there, but we are getting that this year. So utilities, no big move up in rates, particularly long-term rates, have helped utilities. Healthcare, we had HMOs and big pharma like Merck and Pfizer move up nicely. Generic drug makers generally did not do very well. A very wide dispersion in healthcare, but generally good. Tech, we had all over. Software did very well in 2018. Cybersecurity was flattish. Hardware, semiconductors, generally they underperformed. Consumer discretionary, of course, Amazon up almost 25% at one point, 30% at the highs here. That helped a lot as well, only down 7%. The big story in 2018, I have to say, in my number one pick, was the return of volatility. And you can see what happened here. We often put up the low volatility ETF, which is stocks like Coca-Cola and Pepsi and the utilities, against the high beta names, which are stocks that move more when the market moves. And those are mostly tech stocks, so Applied Material, Micron, NVIDIA, Microsoft, Facebook, etc. So there you see the orange line there. We were pretty much even until the beginning of October when we had a big pickup in volatility, and that's when things started going south for all those high beta names, for the Microsoft, the Facebooks, the Amazon, the AMDs of the world. You can see more sideways on the white line. That's the low volatility names. But in the last 2 weeks, rather interestingly, there was a big sell-off in the low volatility names, and I think these are people who were out perhaps having to go out and sell some of the winners on the year, because some of those were definitely winners going into the big decline. That's a sign of how stressful the overall market is. We'll do a couple of more reviews on individual subsectors in the following days. Guys, back to you.